You own Goldman. It's the largest holding
Yeah.
in the financials in your portfolio. You also own the other money center banks. Let's start with Goldman. What are you expecting today?
So we think that the Goldman quarter could come in a little bit better than expected today. We've seen estimates come down sharply over the last month or so. And so we think that if they do surprise positively, it will probably be in their trading revenue. However, what investors are going to be watching for is to understand what they're doing with the business they're getting out of, what's happening on the M&A front, because that trading revenue matters much more, and then what they're seeing in terms of their asset growth.
Let's talk more broadly about the banks. We're just about 6 months or so away from the collapse of SVB. Give us a sense, over that time, how has that colored your view of investing in financials? Are you ready to hold on to what you have, trim your portfolio, add? Where are you at right now?
Well, we are holding essentially with where we are. We have fairly low exposure overall relative to the rest of our portfolios in the banks. We do think that the sector is very cheap here. I mean, it's certainly underloved, been one of the worst performing sectors in the market overall. And the factors that led to the collapse of Silicon Valley Bank and the others are no longer as big an issue. We're not expecting any major fireworks. However, we also don't think that it's an area that's going to see great appreciation over the near term as investors continue to grapple with the risks inherent in the bank's portfolios, with the net interest income, with consumer deposits, and most importantly, with credit quality.
You know, Nancy, as an investor, I think it's interesting. You're saying that you don't see the same risk, but we're just talking about Bank of America, about $100 billion in paper Treasury holdings. Important to mention that it's on paper. A lot of the other banks also holding Treasuries. As we see higher for longer and yields rising, are you concerned about other Treasury losses in the other banks?
Well, we're not as concerned as what we saw in the spring because we think that the deposits are more stable at these banks than they were with Silicon Valley. Remember, there are only losses if they need to recognize them. And part of what happened with Silicon Valley Bank was that they did need to recognize those losses. Having said that, if we see another sharp rise in the long-term rates, that's where the funding stress could come from. We do think that higher for longer is a manageable opportunity for the banks. Have wrapped their heads around that reality. They're trying to reposition their portfolios. Right. The bad news on B of A is the known news today, and it's the unknown news that we need to worry about going forward.
All right, so I know the majority of your holdings are in the big banks. I also just want to get your take on the regional banks. We're talking about banks like they're a big monolith, when in reality we know there's just two different sides of this. So when it comes to the regional banks, what do you think about the valuation in that area of the financials? You mentioned that the big banks, I think, are cheap right now. Do you have the same opinion when it comes to regionals?
Well, the regional banks are also cheap. However, we think that these credit concerns and lending concerns, and particularly the small and mid-sized businesses and the commercial real estate issues, will be a bigger factor for many of these regional banks. In addition, they are seeing, we believe, more pressure on the deposit side than the big banks that have been a flight to safety in many cases for consumers who've moved their deposits there. So we are less enthusiastic on the regional bank side. There will probably be some opportunities as we go through earnings season, but it's not an area where we would make any big moves.